This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
This is Joe Rabil. So what I'm going to do today is I want to talk about mastering your trade setups and entries. There's two parts to every trade, and that is your setup time frame and your trigger time frame. There's a lot of detail in this video, one that probably means you might need to watch this video a couple times. All right, there's a lot of detail in each of the time frames. I show how to go down an extra time frame to really refine the entry, and it'll help you with missed trades, or not missed trades, but false trades, taking a signal maybe a little too early. But you can also understand where the risk comes from in each trade. You got to know what your setup time frame and your trigger time frame is. Even if you go down an extra time frame, you might not be using that as your trigger time frame. It's just helping with the entry. All right. Then I go into some swing samples. All right, using a swing chart to confirm what you're seeing in the price action on the bars of the candles. All right, this is very high-end level. I would consider this a master class. That's why I'm calling it Mastering Entry Techniques. And I think if you can grasp all this, you're well on your way to having some success. Now, if you want to learn more about some of these techniques, you can start with my book. You can click the link in the description to find out more about this. Also, if you do enjoy this content, it really helps the channel if you can sign up there by clicking the link to subscribe, and then also hit the like button. Okay, so I have my grid up of the QQQ. Now, I've pushed it back a little bit because we're looking at this gap down on August 1st. All right, so let me actually zoom out on this. We had a trending move to the upside. We had good momentum characteristics based on the ADX leading up to the gap down. We break the 18-day momentarily, okay? And we're showing a, let me zero in on this a little bit. We're showing a reverse divergence pattern. It's a little hard to see based on the way this is set up. Let me see if I can. So you can see how this is clearly making a lower low and price making a higher low. All right, between those pivots. All right, but we had a gap down. I mean, no one in their right mind is going to buy off this gap down unless you're trading intraday, or you're very, very nimble, or you've got some strategy to use in that regard. For me, I've got a reverse divergence off the 40, but I have to get that's the setup. All right, so I know what my setup is. Now I need to have a trigger. All right, so let me zoom back. We have the setup in place. And now we need a trigger. So we get a gap down on the hourly chart. So that's this gap down. But then the following day, we get a gap up back above the 18-day. And it's an island reversal. For those of you who don't know what an island reversal is, it's where we have a gap down that leaves an opening and then a gap up. And we have this whole kind of little island off the shore, right? Off the mainland. And so when we see that, it's a very bullish sign in most cases. In a lot of cases, it can be sort of a climatic signal on the ADX on that time frame. So we have an undercut pattern essentially that's in the form of an island reversal. We get a strong move to the upside. But either way, I have overrun in the MACD. MACD is definitely overrun here. So I always say I'm not looking for the first signal as this crosses up and comes up to the 40. That's not what I'm looking for. I say, and I tell my subscribers this over and over again, the first thing I'm looking for is essentially a test of the 18. That's really what I'm looking for. I want to see a successful test of the 18. It started back here, right? And we formed a pinch. And then it moved back to the upside and actually it triggered a pinch, all right, off of this test. But the 18 was still declining at that point. I mean, it's a little nitpicky, but for me, I wouldn't take that off of declining. But let's say you did. One of the things that could prevent you from taking that, and it didn't actually make a lower low. If you were using two ATRs, you wouldn't have been stopped out, I don't believe. But the point is that I would go down another time frame. Now, let's take a quick look at the 10-minute at this point. We had the gap down, we had the gap up, and then we had this move up here. We wouldn't have taken because the hourly hadn't set up yet. And then we get the pullback. And here's our first pinch play entry is coming into the 40. It never closed above the 40. It never really gave a trigger because they had overrun, and all we did was rally up to the zero line for the first time. So we wouldn't have taken that trade. On this next trade, we actually formed another pinch. It would have been a 2-time frame pinch play, and green was starting to do a little cross and hold. If you see back here, red was still kind of in command, even though it was a lot of strength. red was still in command up until this point. But when we got the second entry, the second double bottom on the 10-minute, that was really where we would have an interest in this. Now, if I'm doing this, I'm only using the 10-minute to help me with the entry. It is not a trigger. I'm not playing. You could play it hourly 10-minute, and then you'd have to be out by the end of the day. I mean, it was a good day trade. But I'm not. That's not really what I'm looking for. I'm looking at this as a daily, hourly swing trade. And I want to take the risk off the hourly and go from there. All right. So I'm just using this to really refine my entry. The setup pattern becomes so much more viable. If you go down to the 10-minute, you can see clearly where that signal comes in. It's on the second. It's on the second pinch, not the first. The first pinch never got any confirmation off the 10-minute. The second one actually formed a 2 time frame pinch. All right. So that's really a great, I think, additional tool is to go to one more time frame, make sure you get a signal to help you confirm if you have a pullback play on the entry. So this is really a pullback because it's a 2 to 3 bar pullback into the 18. Even though we're calling it a pinch play, that's really what we're looking at. All right. So now I've got the daily and the hourly set up, and I've got the 10-minute helping me to get in. Now, I left this chart over on the left because one of the things I'm going into detail on with my subscribers over the next few months is understanding these different signals that come from the price structure. If we go back and see what was actually taking place, we made a higher high at this peak, and then we came down and formed the island reversal on this gap down here, and then we rallied up, formed a higher low, and then turned back up. Now, it wasn't a higher low, it was actually a minor lower low. So in reality, we went from a higher high to a lower low here, and then formed a lower high, and then made a lower low. But it only lasted like a millisecond. It gapped down and reversed. But in reality, we could call that a bear confirmed signal. All right, bear confirmed. And it's actually a bear power swing is the way I define it. All right, these are all things I'm going into a lot of detail for with my subscribers over the next 2 to 3 months. All right, so we have this bearish pattern. Now it's in the course. I just haven't defined it as a power swing, but you can clearly see if it goes from a higher high to a lower low, that's really what's setting up the power swing. Now, we make this lower low, and then to form the island reversal, we make a move to the upside. And now we've gone from a lower low to a higher high, and now we're forming a higher low, right? And so we have this signal taking place, and then if we wait for the proper trigger, we have confirmation from the swings. And then if you notice from there, we make higher highs and higher lows all the way throughout, and then we finally make a lower high here at this point. Now, the other thing I wanted to mention is that we got an RSI signal as well, all right? And it could have been construed as a signal there, all right? Now, if you're using 2 average true ranges for your stop, you wouldn't have been taken out. If your stop is above this low point, all right, now if you get triggered in and the stop is below the low point, it's a no trade. You don't take that trade. All right, it has to be below the last low at a minimum. And I want to give it even a little bit more room. So hopefully the 2 ATRs offers that. If you just used just underneath the low, I don't think you would have been taken out, but you might have, because I think it made a marginal new low relative to this bottom. I don't know, it was close. But either way, I'm just telling you, using these swings on these swing chart patterns, I think can be incredibly helpful, especially when you combine them with some of our indicators. And again, it would have kept you in. You could use the swing lows as trailing stops as soon as you go to a new high. This is the key to this. All right, if I have a swing low and I go to a new high, once I make a new high, now I can raise the stop below this bottom. All right, now we rally up, we pull back. Now, just because we make a move from a zig to a zag does not mean that I can raise the stop. It has to go to a higher high. Now, why is that? My reasoning is I don't want to be taken out if we make a simple lower high and a lower low, right, and then turn back up. All that was is an ABC. It was not a trend reversal. But if we go to a new high and then and we use this as our stop, and then come and make a lower low, now we have a big strong bear alert of a power swing. A lot more important to me if it goes from a new high to a new low that way. All right, but now look at this. We make another higher low and then another higher high. Once we do that, we can raise the stop to here. Now, you can still use the method that I'm taught in the two ATRs, but this could be a hard number that you could put in place if the two ATRs has not kicked in yet as the next target area or the next stop level. You can use these in the interim, and I think they're pretty worthwhile. You just got to make sure you make a higher high in the process. All right. So in this case, you would have left the stop here, and it would have made a higher low, but it didn't make a higher high. Now, when this comes down and makes a lower low, at some point you're getting stopped out using the trailing stop of the average true range, the way I teach it in the course. But I would tell you that this is a nice little backdrop to have in addition to those ATR stops and as a trailer. All right. Or you can click the link in the description to find out more about some of these techniques. Have a great trading day.